everyone, and welcome to Commodity Culture Interviews, where we dive into the commodities space to give an overview to both new and experienced investors. And today we're joined by a very special guest, but before we get into it, standard disclaimer, none of this is investing advice. Do your own due diligence. And with that being said, I'd like to welcome Justin Huhn, also known as Uranium Insider, to the show to discuss the uranium sector. Justin, welcome to the program.
Thanks so much for having me. Good to see you. Thank you.
Now, you're one of the people online who has the most experience in the uranium sector, having a newsletter dedicated to it, doing a tremendous amount of research. And, we're both big uranium bulls, so we tend to live in a sort of bubble of uranium investing news to the point where we can sometimes forget just how much most people don't know about uranium, particularly as an investment vehicle. So for those who are curious but new to the space, just give us an overview of why uranium and why now.
Why uranium and why now? Well, uranium is a very unique commodity. It tends to move with commodities markets, generally speaking, but it also tends to not really be correlated to anything else. It's a necessary element for nuclear energy. Nuclear energy makes up 20% of the grid here in the United States and somewhere around 10 to 11% of electricity globally. It's a vitally important element. Nuclear is a growth sector. It's set to grow anywhere from 1 to 3% per year out for the next couple of decades. Most people don't know that. Most people think of nuclear as being kind of an older, dangerous technology that's slowly dissipating, and countries are shutting down plants, which in some cases is true. But there's very exciting new technology around nuclear. There's growing sentiment around nuclear because of its ability to produce carbon-free energy. It's actually clean baseload energy. It actually is the safest form of electricity production that's ever been conceived. And most people obviously think that it's probably the most dangerous, and it's not even close. So it's a space that I became interested primarily due to the previous bull market for uranium, which was of epic proportions. The commodity went from, I believe it was $8 a pound at the lows in, I think it was year 2000, started to tick up into the first couple of years of the decade, and just went on a crazy run from about $10 a pound up to $143 a pound, $134 a pound in 2007. And the equities returned manyfold over that period of time. In 2016, I started to research and educate myself on it at the time. And so why uranium? Why now? Why uranium is for those reasons. It's vitally important. Nuclear is a growth sector, and there happens to be a current and growing deficit between the supply and demand of that element. And so that creates price pressure. Obviously, the higher prices are necessary to bring on new production to fill that supply and demand gap. And the prices still need to go higher. We've already been on a very strong run over the past couple of years for the commodity, but the prices still need to go up another 50% minimum. And the fact that we have financial players, most notably Sprott, positioned and having huge influence on the sector, we believe that the price will be going much, much higher than that minimum necessary threshold to bring marginal production online. So why now? It's very exciting. We're in the midst of an overall commodities run. Nuclear is seemingly almost by the day increasing positive sentiment around it's safe baseload power, it's clean energy, and more countries are adopting it. Even countries that have been recently historically bearish on nuclear, let's say like Japan, now the majority of Japanese that are polled do want their plants restarted. So that's a huge shift in sentiment for that to happen. And there's stories like that just all over the globe. So there's a lot of energy behind it, for lack of a better word. There's a lot of enthusiasm around nuclear right now. And so it's a very exciting space to be invested in.
So Chernobyl, Fukushima, 3 Mile Island, nuclear war, Hiroshima, Nagasaki, these are things that, naysayers might point to, and people who are thinking of investing in the sector, it can make them hesitant. So could you let us know how safe or how dangerous nuclear energy actually is?
Well, I would say that the nuclear energy is a lot safer than investing in nuclear or investing in uranium. It's very volatile. It's very volatile. So you need thick skin. You need to have a strong understanding of what it is you're investing in and why. You need to have a relatively strong understanding of the fundamentals of the space in order to weather the volatility. But how safe is nuclear? Well, like I mentioned, it is the safest energy production that's ever been conceived. If you measure, let's say, lives lost versus kilowatt hour produced, it's the safest energy production. And so, the examples that you brought up are obviously very different from each other. Chernobyl, 3 Mile Island, Fukushima are the kind of the three that stick into people's minds. Nuclear accidents. Chernobyl was a combination of human error and lack of a containment. So all modern reactors have a thick concrete containment around the reactor core. So Chernobyl literally could not happen again at this point. Whether or not a reactor can melt down again, of course, that can happen. But the fact that there is a concrete containment that is very, very thick and very robust around every reactor core that's currently operating, Chernobyl will not happen again in the same manner, of course. So 3 Mile Island, that's a perfect example. That was a partial meltdown of the reactor core and the containment held it. There was not dangerous radiation outside of that immediate area. So it actually, while the meltdown of the core was not technically like a positive function of the reactor, the containment did function as it was designed. And so that's actually, in my opinion, 3 Mile Island is a positive story for nuclear. In Fukushima, Fukushima was a really good wake-up call because it got all remaining reactors that were up and running around the globe upgraded in terms of their safety mechanisms. So the reactor totally survived that huge earthquake just with no problems. The tsunami caused the problem. So when the reactor shut down following the earthquake, the cooling had to continue to be flowing. So they have to keep water running through the core to keep the core cool. And because the electricity shut off from that earthquake, the backup generator was running, and that got flooded by the tsunami, causing the partial meltdown. So, but even then, that nuclear accident did not take a single life. Not one person was killed from the Fukushima radiation. So there were some deaths due to the panicked evacuation of the area, unfortunately, and of course from the tsunami. But most people think that was a very, very dangerous and fatal accident, and it wasn't. So these examples really, in my opinion, go a long way towards supporting nuclear, not necessarily saying how dangerous it is. The other big piece that people always highlight is the nuclear waste. And while it's true that nuclear waste remains radioactive for a very, very long time, it's not extremely radioactive. It's slightly radioactive. It's used nuclear fuel. So a lot of the reactivity has been utilized to create the energy that it did when it was in the reactor core. But nuclear waste is stored extremely safely with a lot of oversight and a lot of regulation in casks that are thick-walled concrete and steel. And depending on the jurisdiction, they can be stored either at the site, which in the United States, the nuclear waste is stored in these casks at the actual site of the nuclear reactor. In a case like Finland, they have an underground facility where they take these same casks, they're taken deep underground, and they're essentially buried in clay and concrete and set, for centuries or longer safely. And so, and the amount of waste that's produced is minimal. So for the United States, the largest nuclear fleet in the world, since nuclear energy production from the early 60s till now, all of the waste that's ever been produced in the United States can fit on a single football field 30 feet high. So it's really not a lot of material that comes out of these reactors in the terms of waste.
Could you speak a little bit about the supply-demand fundamentals currently in play for uranium? Is there currently enough uranium above ground to power the world's reactors, including all of those under construction?
Yes, there currently is, and there's no real shortage of uranium, as I'm sure you know. It's a very, very abundant element. It's basically everywhere. It's in seawater. It's in, you can test soil samples around the world, and there's usually a small amount of uranium essentially everywhere. In the mountains, just surrounding the valley here in my backyard, there's actually decent grades of uranium, but this is in California and it will never be mined. So it's just a matter of at what price and what the grades are for that element. So there's no shortage of uranium, but there is a present shortage of uranium being mined relative to what's being consumed. So right now there's roughly 180 million pounds of uranium that's being consumed, or uranium equivalent that's being consumed in the world's reactor fleet. And there's only about 135 million pounds being mined, and that's primary mined production. So some of that gap gets filled by what's called secondary supply. This is material that comes usually from enrichers or mostly from enrichers. That's kind of a complex concept to really talk about, but basically enrichers are able to take excess capacity that they have at their enrichment facilities and spin the material down the centrifuges greater than what they have agreed to with their utility customers. So they can utilize that excess capacity to underfeed the centrifuges, and they have that extra feed material, the UF6, and they sell that into the market. So underfeeding and tails re-enrichment, same thing. They can take excess capacity and re-enrich tails material, waste material from previous enrichment. They can put that back into the centrifuge and spin it a little bit more, squeeze a little bit more out of it. So between underfeeding and tails re-enrichment, there's historically, there's been more like 20 to 25 million pounds a year. That's more than likely down to between 10 and 15 million pounds a year. So that makes up a little bit of that gap, but it's still a huge gap. We're still looking at 20 to 30 million pounds after secondary supply of a deficit this year. And to put that in context, in the United States consumes 45 to 50 million pounds a year, every single year. And so this is almost enough of a deficit to keep the largest fleet from running. Now, the nuclear utilities sit on a certain amount of inventory, and they do that by design. They do that as a safety mechanism. The US utilities have roughly about 2 years of inventory. The EU has 3 years or a little bit more. They have a minimum of 3 years. But the supply deficit really grows out in the future based on what we're seeing in terms of life extensions for existing reactors and build out plans. A lot of that has coming from China. They're planning on they're adding, let's see, they're about 50 gigawatts right now. They want to get to 200 gigawatts by 2035. And that's about 120 reactors that they're planning on building during that time frame. Just absolutely huge build out plans. But France is planning to build more. They already have one of the larger fleets in the world. The UK just stated last week they want to build 6 or 7 new reactors in the next 10 to 15 years. So the sector is growing pretty substantially. And in order for that supply demand gap to get filled out into the future, we need higher uranium prices. And all of these projects that are proposed, well, first of all the projects on care and maintenance are going to come back online. And then we still have a supply gap. And that's when all of these new development projects will need to come online. And that takes a lot of capital, a lot of risk, a lot of planning, a lot of development, a lot of money. And it doesn't happen overnight. So it's kind of a long-term bet, really.
So let's dive into some of the investment vehicles that exist in the uranium space, starting with the physical trust. You've got the Sprott Physical Uranium Trust. You have Yellowcake PLC. What's your feeling on those investment vehicles?
I think, well, they're very different between those two. Yellowcake PLC trades on the London Stock Exchange. It's traded at a substantial discount to their net asset value for a while now. And they're having some trouble filling that and getting it back up to trading at NAV. And that might have to do with the exchange. That might have to do with the fact that SPUT is just kind of stealing the show here, the Sprott Physical Uranium Trust. The big difference with the Sprott Trust is that they have an ATM facility, so they can issue shares into the open market whenever they're at a premium to NAV and raise cash and buy pounds just over and over and over. Where you have Yellowcake, their prospectus essentially allows them to purchase $100 million worth of uranium, US dollars worth of uranium from Kazatomprom. And they can do that. They can exercise that option once a year. And so they submit that proposal each year whenever they want to do it to their shareholders. It goes to a vote. If it's approved, then they go out and they do a capital raise. and then they go and buy the uranium. So that's their process. Whereas SPUT is day over day issuing shares into the open market and buying uranium almost every day. They bought another 100,000 pounds yesterday. They purchased 14 million pounds almost this year. So they're a powerhouse in the space. As far as investment vehicles go, SPUT, I think, is the clear choice between those two, especially in terms of liquidity. It's growing in liquidity. And money invested into that vehicle equals the purchasing of physical uranium. It creates a flywheel. It's brilliant. It's really brilliant, and it's safe. Relatively speaking. Knock on wood, asterisk, disclaimer, it's a relatively safe, it's probably the safest vehicle if you want exposure in the uranium space, because it's essentially exposure to the commodity itself. You're not taking mining risk, you're not taking jurisdiction risk, management risk, really. It's just a purely exposed to the commodity, and it will trade at a discount and premium to NAV. The premium to NAV doesn't usually get very high because when it does, they're selling pressure with that ATM. But the discount to NAV right now, I think it's somewhere around 4 to 5% discount to NAV. So usually when we get around that level, investors will arbitrage that and buy it back up. But I think it's brilliant. It's brilliant. Huge catalyst for the sector.
So what about ETFs like URNM? We've got URA in Canada, where I'm from. How do you feel about the ETFs?
ETFs are just a good broad basket. I think that URNM is probably the best vehicle in terms of ETF exposure. They are now, just last week, announced that the shareholders of URNM approved the takeover of the management of the vehicle by Sprott. So it's now the Sprott, or will be soon, the Sprott Uranium Miners ETF. It's 100% allocated to uranium and pure play, just like HURA in Canada. HURA is great as well. It's just very small. So URNM will give you far greater liquidity. URA also is very good in terms of liquidity. It has a much deeper options market. I'm hoping that URNM can compete in that realm at some point. And we've been encouraging John Champaglia from Sprott to do a 3-for-1 stock split and bring that price back down to get and improve liquidity, improve volume. It'd be on relative price parity to URA, and the options market would improve. So URA is great for options. It's only 70% allocated to uranium names. So they hold, BHP and Rio Tinto and Samsung and a number of other companies that have some relevance to the mining sector, and perhaps maybe a little bit BHP has some uranium product, but URNM is really kind of the way to go. And that's probably the second safest option and good with liquidity.
So moving on to the next kind of up the risk ladder, the producers, the big producers, your Kazatomprom, Cameco, China General Nuclear. What's your view on those as investments?
They're kind of the main choice really for institutions besides SPUT, is going to these large caps. So Kazatomprom, I think, is probably the obvious value play. I don't want to speak too much on the individual company names out of respect for our newsletter members, but it's got a bit of jurisdiction risk right now because of its proximity to Russia, and the fact that they have a JV with Russia and the shipments of the uranium go through Russia. So it's a bit of a question mark right now. The stock is recovering a bit, which is a good sign for the sector. It's a large cap. It's the obvious value play. They create enormous amounts of cash flow. They pay a dividend. The other large caps are, obviously, just generally speaking, across any mining investment, the large caps usually have less risk and better liquidity, and the small caps have way more risk and way worse liquidity. So, the large caps are kind of the darlings of the institutions.
So now moving on to companies who are not producing yet, but who are moving towards production. And I'm going to throw out a few examples, but we're not talking specifically about these companies. Just an example, something like a NextGen, like a Denison Mines, a Global Atomic. These companies who have proven reserves in the ground and are moving towards production. What's your feeling on those type of companies?
I really like development companies. We generally focus on development companies for our newsletter. We tend to want liquidity. We also like our preferred investment in this space, and for me personally also across any resource space, is a company that has a story still to tell. And that's to put it very simply. So if a company has already made a discovery and they're just kind of sitting around and waiting for the price to rise and not really doing much, that obviously, like in the case of NextGen, can be a great performing stock, but sometimes in the smaller cap, there's nothing really to move the stock between now and if and when it actually gets developed. So we really like stories that are evolving in the development space. And of course, there's less risk. It's not necessarily a drill play. The exploration companies that are more of a drill play have much more risk, but we really like the development space. I think that's where you can kind of find a sweet spot between liquidity, risk, and upside potential.
So let's move into maximum risk. Explorers without a discovery. Are these companies that investors maybe throw some extra money in as a lottery ticket, or do you ever take these companies seriously as an investment?
I have in the past on a personal level. There definitely are some serious companies that are exploring. You really have to do extra due diligence with explorers. There's plenty of explorers in the uranium space that have been poking holes in the same piece of ground for 10 years, and they just rinse and repeat. More power to them. They're doing their thing, and the management's getting paid, and they've got a vehicle, and maybe the stock moves, and shareholders are happy. But you obviously take the risk. A lot of times, what happens with an exploration company is speculators will come in based around a drill program, and then when the drill program comes to fruition, the results will determine the next leg. So if you're baking in a lot of expectation for a drill program and it doesn't turn up, I'm not going to mention the name. There's a stock right now that's been hit pretty hard this week because of their drill results were not what the market was hoping for. And that's just what you get with exploration companies. I think, somebody actually reached out to me with an interesting idea just a few days ago, now that you bring it up, for a diversified, taking 1% of your portfolio and diversifying it into 5 explorers, just to have some exposure. It's an idea. Of course, if one of those 5 goes on a moonshot, then you've got 0.2% of your portfolio going on a moonshot. Does that move the needle enough? I don't really know. Not really my style, but every bull market has 1 or 2 explorers that hit something fun during the bull market and go on a serious run. So it's always a gamble with explorers, but it can be an exciting space to invest in.
Awesome. Well, Justin, this has been a masterclass in uranium and uranium investing. Really appreciate having you on. You have a newsletter where you focus specifically on the uranium industry. Could you let people know about that and where they can find it?
Sure. Yeah. The newsletter is called Uranium Insider Pro. You can find us at uraniuminsider.com. We've been doing it since August of 2019. We have a total portfolio gain of about 530% right now, overall portfolio wide. So we've done quite well, definitely outperforming the ETFs. We have our own, methods of choosing the companies in the space. We also like to add a little bit of low risk leverage with some intelligent options trades that we do once or twice a year. We do monthly webinars. Our next one is this coming Monday, the 18th, for members only. Those are really fun. We go very deep into the sector for about 2 hours and usually have a special guest from one of our focus list companies. And then we do a monthly in-depth macro focused newsletter that comes out the first week of every month, and intra-month bulletin emails whenever we have either macro fundamental news that's urgent or trades entering new trades. And so I've got a small team. My right-hand man is a retired hedge fund guy. He's very, very sharp. He was in the metal space for almost as long as I've been alive. So it's great to have him on board. And yeah, it's been a really great experience. I'm very grateful, very humbled and blessed by this experience. And we focus on this stuff every single day. So it's literally what we do all day, every day. And we try to distill it all down, all of the details and the messy fundamentals that are flowing around this space into something that is understandable and actionable for investors.
Well, we'll definitely put a link to that in the description below, along with your YouTube channel where you give very frequent market updates so people can see you there as well. Thank you very much for joining us, and we'll have to have you back again to continue the conversation in the future.
Anytime is my pleasure. Thanks, Jesse.
Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.